All right, so you've got $100 and you're thinking, can I even start investing with that?
That's such a good question because it's a question I think a lot of people have.
Right. It feels like a drop in the bucket.
Exactly.
But we did a deep dive on an episode of a podcast, and it turns out you absolutely can.
It's more possible than you think.
So we're going to break down all those options in today's deep dive and hopefully inspire you to take that first step.
Yes, because taking that first step is often the hardest, but once you do that, the rest can follow a lot easier.
So the first thing they emphasized in this episode, before you even think about where to put that money, is figuring out what you want to achieve. Like, what are your goals for this $100?
Absolutely, and sometimes people skip that step.
It's so tempting to just jump into the apps and the stock tickers and all that exciting stuff.
Absolutely. It's so easy to get caught up in like, oh, what's the hot stock? What's everyone talking about? But it's like, hold on a second. Before you even get there, just take some time to really reflect and think about, okay, what am I hoping to get out of this? Why am I investing this money?
Yeah, because that $100 means something different to everyone.
Right, exactly.
Like for some people, that could be the start of a retirement fund.
Exactly. Or maybe it's, I just want to learn how to invest. I want to dip my toe in, and I just want to use this $100 to kind of get my feet wet and see what it's all about.
I love that. And speaking of dipping your toes in, they talked about this concept of fractional shares, which I have to admit, I was today years old when I learned about this.
Oh, it's amazing.
Wow, tell me everything.
Okay, so you know how like you see these big companies, right?
Yeah.
And their share prices are like hundreds, sometimes even thousands of dollars.
Yes.
And it can be really intimidating, especially if you're just starting out, to be like, well, I can't afford to buy a whole share of that.
Right, because it felt like to get into those big name companies, you needed thousands of dollars to even have skin in the game.
Exactly. But fractional shares change everything.
Okay.
So with fractional shares, instead of having to buy a whole share, you can buy a fraction of a share.
Okay, so like a slice of a share.
Exactly, like a slice of the pie.
I'm all about that.
Right, so let's say like a share of company X costs $500, but you only have $100. You can still buy a fraction, like a fifth of that share.
Oh, that makes it way more accessible.
Exactly, and then you still get to participate in the growth of that company.
That's amazing. So you're not priced out of these big, well-known companies
Right.
just because you have a smaller budget.
Exactly.
I love that. Okay, so that's fractional shares for stocks, but let's say someone's not ready to dive into the stock market quite yet. What if they want to do something else with that $100? What other options did they suggest?
They had a bunch of really good ones. So they talked about ETFs. Have you ever heard of an ETF?
I have heard of an ETF, but I feel like I'm always afraid to admit that I don't totally know what it is.
Yeah, so an ETF is basically like a basket of stocks.
Okay.
So instead of like buying one individual company, you're buying a whole bunch of companies in one go.
Okay.
And these ETFs, they often track like a specific index. So let's say the S&P 500, or maybe it's like a certain sector like technology or healthcare.
So you're automatically diversifying because you're getting a little piece of a lot of different companies in that basket.
Exactly.
This is supposed to be a good thing, right? Diversification.
Diversification is key, especially when you're starting out.
Okay, good to know. So that's ETFs. What about, like, what if someone's really, really afraid of risk?
So for someone who's really risk averse, they also mention bonds.
Okay, tell me about bonds.
So bonds are basically like when you loan money, typically to a government or a corporation, and then in return, they pay you back that money with interest.
Okay, so they're generally considered a little bit safer than stocks, maybe a little less volatile.
Yeah, they tend to be more stable, although you might not see the same potential for high growth that you might see with stocks.
So it's a trade-off.
It's all about finding that balance between risk and potential reward.
I love that. And they also mentioned one more thing that people often overlook, and it's like the simplest, most basic option.
High-yield savings account.
A high-yield savings account.
Yeah.
Tell me more about why I might want to do that with $100.
Okay, so with a high-yield savings account, you're not going to get rich quick. Let's just put that out there.
Right.
But it's a way to earn a better return on your money than you would in a traditional savings account while still keeping it very, very safe.
And I feel like right now, interest rates are going kind of crazy.
They are.
So it's not a bad idea to just even park it somewhere where it's earning a little something while you're figuring out your next move.
Exactly.
So with just $100, you could dip your toes into the stock market, explore ETFs, look into bonds, or just kind of hang out in a high-yield savings account. There are so many options. That's actually kind of amazing.
It is. It's really empowering when you think about it.
It is empowering. But I have to say, I think for a lot of people, especially new investors, the biggest hurdle is just that fear of losing money
Absolutely. It's a really common fear.
because it's your hard-earned cash.
Exactly. And you work hard for your money. And the idea of losing it, especially as a new investor, can be really, really scary.
So how did this podcast episode recommend overcoming that? How do you manage that fear?
So they had a lot of really great tips. And I think one of the biggest ones, and they kind of touched on it throughout the episode, is the importance of diversification.
Okay. We did mention that.
And I know we did, but it's worth diving into a little bit deeper. So diversification, like we said, it's like that old saying, don't put all your eggs in one basket.
Right, spread it around.
Yeah.
But how do you diversify with $100? That doesn't feel like a lot to play with.
That's where, we talked about those fractional shares. That can come in really handy. So you could put, say, $30 into a fractional share of a large company, like maybe one of those big tech giants.
Okay.
And then you could take another $30 and you could put that in an ETF. And maybe that ETF tracks like the renewable energy sector or something that you're interested in.
So you're already in a couple of different areas with just $60.
Exactly. And then if you wanted to be extra cautious, you could even take that remaining $40 and you could pop that into a high-yield savings account.
Okay, so you've got a whole little diversified portfolio going on there with very little money.
Exactly. And you're experiencing different parts of the market. You've got a little bit in stocks. You've got a little bit in that basket of stocks with the ETF. And then you've got that little safety net with your high-yield savings account.
That's amazing.
Yeah.
I never would have thought about it like that.
Yeah.
I think the hardest part, though, is even when you've diversified and you're feeling good about it, there's no guarantee in the stock market. So you could still lose money, right?
Yeah, absolutely. And I think that's something that's really important for new investors, especially to remember.
There's always that element of risk. But one thing that the guest on this podcast really emphasized is investing is a long game.
It's not about getting rich quick.
Exactly. And I think sometimes we see these headlines or maybe we hear these stories about people who, made a ton of money really fast.
Yeah, it's very tempting.
And it's easy to get sucked into that, but the reality is building long-term wealth, it takes time.
Yeah, it's more of a marathon, not a sprint.
Exactly. And they cautioned against, they actually advised against constantly checking your portfolio or trying to time the market.
Because that's when you can get really emotional.
Exactly. Because if you're watching those day-to-day fluctuations, it's easy to make decisions based on fear or FOMO.
Fear of missing out.
Exactly. When really the best thing you can often do is just okay, I've got my plan, I'm sticking to it, and I'm just going to let time do its thing.
Time in the market is better than timing the market. 100%. And they emphasize that, even if you're only investing a small amount, but you're doing it consistently, over time, that's when you really start to see the power of compound growth.
Okay, now that's what I want to talk about. Compound growth. It feels like one of those investing buzzwords that everyone throws around, but sometimes I feel like I'm nodding along, pretending I know what it means.
It's like the magic of investing.
Yeah. Explain it to me like I'm 5.
Okay, so imagine a snowball.
Okay. I like snowballs.
And you start rolling that snowball down a hill. And as it rolls, it picks up more and more snow.
It gets bigger.
It gets bigger and bigger and bigger. Compound growth is basically that, but with your money.
Okay.
So when you invest, you earn returns. But then those returns get reinvested.
Okay.
And then they earn their own returns. And then those returns get reinvested and they earn their own returns. So it's like your money is making money on top of the money that it's already made.
So that little snowball, which in the beginning was our $100, it just keeps getting bigger over time as long as you keep it rolling.
Exactly. It can make a huge difference over the long term.
So starting early, even if it's a small amount, is better than waiting till later when you maybe have more money.
Exactly. Because the sooner you start, the more time you have for that compound growth to work its magic.
That's really powerful. So it's kind of a mental shift. Investing is as much about having the right mindset as it is about the actual numbers.
I think you're absolutely right. It's about patience. It's about discipline. And it's about, honestly, not getting too caught up in the day-to-day fluctuations.
Yeah. Don't panic. Don't panic sell.
Exactly. And, speaking of mindset, I think another big part of this is just feeling empowered and not feeling overwhelmed, because investing can feel really intimidating when you're first starting out.
Because it's a lot. There's so much jargon, so many different strategies, so many opinions. Where do you even begin?
Exactly. And the guests on the podcast, they actually talked about that. They said, you don't have to be like a financial whiz to start investing. You don't have to know everything on day one.
It's like anything else, right? You learn as you go.
Exactly. And they actually encourage people to just be curious and to look for those free resources, like there are so many amazing websites out there.
There are. I feel like we talk about them all the time on the show.
Exactly. And there are investing apps that have like educational components built right in.
Yeah, a lot of them have like little explainers and articles and things like that.
Exactly. And even podcasts like we were just talking about.
Oh, stop it. You're going to make us blush.
But seriously,
Uh-huh.
there are so many incredible free resources out there. You can learn so much without having to spend a dime.
Totally. And it makes it less intimidating, too, because you can kind of learn at your own pace. You don't have to sign up for like a whole course or anything.
Exactly. It's all about like taking it one step at a time.
So it's really just about being curious and not being afraid to ask questions and do a little digging.
And they also emphasize that even they, as experienced investors, they're still learning every day.
Right?
Like the market changes constantly. There are always new things to learn, new strategies to consider.
So it's an ongoing process.
Exactly. And I thought that was really refreshing to hear because sometimes you think, oh, these people are the experts. They have it all figured out.
Right. They know everything.
But the reality is the best investors are the ones who are constantly learning and evolving and adapting.
Yeah, that makes a lot of sense. Okay, so we've covered a lot of ground here, and I feel like the key takeaway is starting with $100, it's totally doable. You have options.
Mm.
But I love that this episode ended with this really interesting thought. Do you remember what it was?
Oh, yeah. They ended by saying, okay, you can invest $100, but what if you invested $100 every month?
Yeah, that's the challenge, right?
Exactly. And it completely changes the game because, yeah, $100, that's great.
It's a start.
But if you can make that a consistent habit,
Yeah,
over time, that's where you're really going to see the magic of compound growth working for you.
right, because that little snowball is just going to keep building and building and building. Well, I love that. So I think that's our challenge to all of you listening. What if you took that $100 and made it a recurring thing? What kind of difference could that make in your life?
I love that question. And I think that's something for everyone to really reflect on. Like, what can you achieve? What's possible? If you just commit to that consistent action, even if it starts small, it can have a massive impact.
That is such a good note to end on. So there you have it, our deep dive into the world of investing, $100 and then some. We covered everything from goal setting to fractional shares, ETFs, bonds, high-yield savings accounts, even compound growth, and the importance of diversification.
And most importantly, we learned that you don't have to be an expert to start.
Right. Take that first step, learn as you go, and remember, time is on your side.
Couldn't have said it better myself.
All right. Until next time, happy investing.